a financial storm involving hundreds of thousands of victims. The spotlight was on Ding Ean Group, a well-known investment holding company in Shenzhen. Established in 2011, Ding Ean claimed to base its operations on a so-called Oriental philosophical value investment theory. It aimed to create a financial and cultural business strategy using an innovative profit model. With a management fund exceeding 100 billion yuan, about 14 billion USD, Ding Ean's wealth management products boasted an annualized return of up to 100%, making it a legendary figure in Shenzhen's investment market. However, now, various investment activities have encountered issues such as rebate delays, non-refundable deposits upon contract expiration, and difficulty in redemption. Moreover, multiple companies under the Ding Ean umbrella have been deregistered, and their phone lines are unreachable. In recent days, hundreds of investors have gathered to protest at the company's office location in Shenzhen. Unfortunately, it has only recently come to light that almost all investors' subscription contracts stipulate Hong Kong courts as the jurisdiction. According to professional opinions from lawyers at Inca law firm in Shenzhen, these agreements contain many unfavorable clauses posing risk for investors. Litigation costs in Hong Kong courts are expected to be extremely high, making it challenging for investors to take legal action. The unfortunate reality of investors losing everything and facing a lack of avenues for complaints is once again unfolding. As early as February 19, 2023, the Shenzhen Office for Preventing and Handling Illegal Fundraising issued a risk warning regarding Ding Ean's related businesses. The notice indicates that upon preliminary investigation, it was found that entities associated with Ding Ean are numerous and distributed across various regions nationwide. The entities operating in Shenzhen were identified as lacking a financial license and the qualifications to engage in financial activities. Actually, as early as August of last year, there were rumors of a liquidity crisis involving Ding Ean. On November 21st, the Shenzhen Financial Supervision and Administration Bureau specifically mentioned Ding Ean, warning of associated risk. It stated that the attraction of investors to subscribe or original equity or options of Ding Ean's affiliated entities posed a risk of illegal fundraising. By that time, various investment activities had already experienced problems such as delayed rebates, failure to refund upon contract expiration, and difficulties in redemption. An internal investment manager at Ding Ean revealed that one of the company's co-founders, Ma Xiaoqiu, was recently arrested while attempting to flee to the United States. She is currently under bail, and the controlling shareholder, Sui Guangyi, cannot leave China and is negotiating with Middle Eastern financial groups to seek financial support. The same insider mentioned that the company is now out of funds, unable to meet its financial obligations, and requested time from investors to address the issue. Following this news, Ding Ean's holdings listed on the Hong Kong Stock Exchange plummeted over 30% on the same day, experiencing a cumulative decline of nearly 70% in 5 days. A document titled Major Good News Announcement for All Investors of Ding Ean International Asset Management Group has been circulating in investor groups starting from January 10, 2024. The notice states that Sui Guangyi has announced the application of Ding Ean for listing on an international digital asset exchange. All investors are informed of a closed period lasting from January 10 to September 10, spanning 8 months. However, on January 17, Ding Ean issued a public announcement on the Hong Kong Stock Exchange stating that the so-called important good news announcement was not released by the company and the reasons for the decline in the company's Hong Kong stock were unknown. Many investors found themselves confused and increasingly anxious. In fact, investors have been manipulated by Ding Ean for quite some time now. From the company's inception, it followed a mysterious and unpredictable path, resembling a quasi-religious approach and engage in high-interest fundraising offering monthly interest rates of 5 to 6%, doubling in 18 months, with annual interest rates exceeding 30% at their lowest. In its early years, a product contract displayed an average annualized return rate of 16.2% over 5 years. Ding Ean's investment portfolio includes at least 3 Hong Kong stocks and 2 A shares. Many of these stocks had poor performance or were on the verge of delisting, but experienced a brief surge in stock prices after Ding Ean's investment. Things took a more absurd turn when Ding Ean claimed a 36% annual return. On January 10th this year, Ding Ean even dared to promise a 20-fold guaranteed increase in asset value for those who'd hold for 10 years. Co-founder Ma Xiaoqiu once boldly claimed at a conference,
这是全世界收益率最高的，没有任何人超过的。
This is the highest return in the world that no one can surpass, including Warren Buffett. The miracle at the end of this year is that our Singapore gold hedging trading achieved a return rate of 86.7%. Company founder and boss Sui Guangyi has an extraordinary background. In his early 30s, he became the deputy mayor of Dunhua City in Jilin, making him one of the youngest officials at the departmental level in the 1990s. At the peak of his career, he suddenly resigned to focus on Taoism. Claiming to have derived a Zen investment method from the famous traditional books Tao Te Ching and the I Ching, he established a so-called Oriental philosophical value investment theory based on Taoist principles. He claims to use mysticism in stock market investments and financial management. Given the high interest rate and seemingly reliable returns, Ding Ean's reputation grew, attracting more and more investors and expanding its capital base. In the eyes of believers, Sui Guangyi is an investment expert, transcending economic cycles with his Zen and mystical financial theories, even during challenging economic times. Ding Ean excels in building its image, often inviting celebrities from the business and political sectors for endorsements. This includes former President of France, Prime Minister of Japan, and ex-Prime Minister of Australia to its annual events. Former Western political figures after leaving office are often eager to capitalize on their fame, providing corporate endorsements for a fee. Many unsuspecting Chinese investors fall prey to these false endorsements, with Su Guangyi once declaring the ambition to turn Shenzhen into the Oriental Wall Street. Su Guangyi presents himself as the reincarnation of the Big Dipper and often appears in public with an ethereal and wise demeanor. Through cryptic marketing, Ding Ean simultaneously promotes an ambiguous belief system and sells investment products to its followers. In the remote city of Dunhua Jilin stands a mysterious mountain forest with 7 pyramid-like structures resembling those of ancient Egypt. Contrary to conventional residential or commercial structures, these buildings were constructed by Ding Ean for a peculiar cultish ceremony. Once you purchase Ding Ean's pyramid planting foundation, you can allegedly alter your destiny, extend your life, prosper your family, and achieve financial success by placing items like your hair, teeth, or birth date inside a 13-centimeter high small pyramid. Then plant this small pyramid into the Pyramid Valley. During the COVID-19 pandemic, Ding Ean claimed a high success rate in curing infected individuals by gifting them pyramids under the guise of charity. While these seemingly absurd marketing strategies might appear ridiculous to some, they captivate a significant number of less discerning believers in China. Under the influence of Ding Ean, many property owners in Shenzhen, one of China's cities with the highest real estate prices, obtained operational loans from banks and invested these loans in Ding Ean. They fantasized about leading prosperous lives by capitalizing on interest rate differentials. Ding Ean indeed managed to fulfill its financial obligations for a considerable period, further deepening the blind faith of its followers. However, by 2024, as foreign capital rapidly withdrew, the economy experienced a sharp downturn and both Hong Kong and A share markets plummeted. Even Shenzhen, a city where many believed property prices would never fall, couldn't withstand the decline. As property values depreciated and property financing faced increased scrutiny from regulatory authorities, investors still under the spell of Ding Ean resorted to financing luxury car purchases. For instance, they would buy a luxury car worth $1 million, simultaneously obtaining consumer loans from 3 banks totaling $3 million. The $1 million would be used to pay for the car, while the remaining $2 million would be invested in Ding Ean. The illusion was to repay the consumer loans using the monthly dividends from Ding Ean. The exit of Ding Ean's partner Ma Xiaoqiu triggered a chain reaction leading to the collapse. With the fund chain broken, the scheme could no longer continue. Once ensnared in the high-interest dividend trap set, the flames of human greed ignited, and almost no investors could resist the temptation until reality hit in the final stage of the scam, the complete loss of invested capital. Another wave of middle-class and even wealthy individuals found themselves on the path of foreclosure for their properties and for sales of luxury cars. Examining the Ding Ean's case reveals 3 profound and harsh realities about contemporary China. First, harsh reality. In China, almost no enterprise can grow and thrive solely based on its products or services. Political and business connections are essential for success. Over the past decade, numerous assets management and P2P lending companies in China have collapsed, but Ding Ean miraculously survived for 12 years, attracting 500,000 investors and managing funds exceeding 130 billion yuan. However, it operates without a financial license or qualifications for a financial business. This is an absurdity unique to China. Behind this phenomenon lies the common Chinese characteristics. Any enterprise with a significant asset scale has to have powerful government support. Founder Xu Guangyi, passed as a deputy mayor, undoubtedly contributed to building his business empire. In 2017, Ding Ean went public by acquiring Hong Kong-listed China Investment Corporation through a backdoor listing. Subsequently, it also took stakes in several listed companies, including China Motion Telecom Investment Limited, SD Tianma, China Intelligence, and IRICO Group. Subsequently, these stocks experienced a surge in value. However, in March 2019, Ding Ean was suspected of market manipulation, leading to a suspension by the Hong Kong Stock Exchange and an investigation by the Hong Kong Securities and Futures Commission. The investigation involved 9 brokerage firms. In September 2022, the Zhejiang Securities Regulatory Bureau issued a warning letter to Shenzhen Zhongqi Company, Hainan Qirishen Company, Xu Guangyi, and Liu Xinyi, cautioning them about significant omissions in information disclosure. In December of the same year, Ding Ean was accused of illegal fundraising. A company facing numerous regulatory inspections yet stands tall implies it has powerful people backing it up. Ding Ean's myth is not just a corporate myth. It's essentially a myth of collusion between officials and businesses. Ironically, the more this happens, the more trust the believers place on it. Under the long-term rule of the Chinese Communist Party, the inherent admiration for authority figures is widespread. People tend to put more faith in the support from the higher-ups, regardless of whether the company itself is trustworthy or not. Second, hard reality. In China, the threshold of setting up scam is remarkably low. While Taoism, Buddhism, Zen, divination, tea ceremonies, pyramids, and even certain mythical rituals hold profound value and offer great benefits, they have unfortunately been exploited. While Xu Guangyi attempts to fuse Eastern and Western elements, his rendition distorts and misrepresents the essence of traditional Chinese cultural wisdom. In the end, it all amounts to harvesting intellectual taxes from those lacking proper cultural enlightenment. The Chinese people, under the radical influence of the Chinese Communist Party, has become lacking in critical thinking and habits of independent verification. The lack of belief in righteous religion and spirituality has made many susceptible to occult scams. Combined with the flames of human greed, once ignited, there is little room for rational thinking in investment decisions. Many investors in Ding Ean find themselves in dire straits after entrusting large sums of money, unwittingly depositing funds directly into personal accounts of Ding Ean's agents. Shockingly, even receipts lack legal validity, and numerous investors sign contracts without fully understanding the terms. With investors displaying a lack of basic rationality, falling victim to scams becomes almost inevitable. The pity felt for those who become victims is overshadowed by their own culpability, making it difficult for people to sympathize with the sudden impoverishment of the middle class. In the realm of combating financial fraud, the Chinese government, while not entirely indolent, is criticized for its lax oversight, delayed actions, and feeble enforcement. The fallout from the P2P lending crisis endorsed by former Premier Li Keqiang continues to haunt countless middle-class investors, illustrating the government's inability to secure their hard-earned money. Similar assets management companies structured like private equity funds and attracting wealthier individuals are expected to face similar fates, painting a grim picture for the future. Without stringent regulations and strict enforcement of existing laws, scammers easily exploit their connections, and with targets driven by greed and impaired judgment, financial scams flourish unchecked. The third harsh reality becomes apparent. The wave of financial collapses continues. While claims that China's economy is on the brink of may not entirely align with reality, the unmistakable tilt of its economic edifice is undeniable, and the speed seems to be accelerating. Given that a considerable portion of Ding Ean's investment used real estate as collateral for loans, the pressure of repaying loans, compounded by the impending deadlines, forces investors to resort to selling their properties for survival. Unfortunately, the plummeting property prices in Shenzhen, combined with the uncertainty of finding buyers, increase the likelihood of these investors facing legal consequences and property foreclosures. Those who financed their investments through bank loans and invested with Ding Ean find themselves in a nightmarish predicament. Ding Ean is just another addition to the series of financial scandals following those involving Zhongji Group and Haiying Wealth in 2023. The ratings behind Zhongji Group appears even more dazzling than Ding Ean's mystical aura. It has now reached a point where no one can escape, whether they appear godlike or rooted in prosperity. If it weren't for the overall economic environment deteriorating to an unsustainable extent, it's likely that entities like Ding Ean, with backing and adept marketing, could continue to sustain themselves. The chain of financial collapse will not stop at Ding Ean. 2024 has only just begun. With real estate companies and giant financial institutions collapsing one after another, the tranquil days for many families are gone for good. As the economic engine stalls, real estate companies go bankrupt, the property market slumps, the stock market continues to decline, financial institutions face collapses, banks experience runs, and more real estate is sold off, the real estate market is further wounded. This harsh winter may be intertwined and prolonged, leading to more people returning to poverty, more unemployment, and more individuals pushed to a point where there seems to be no way out due to debt. Shenzhen, once the vanguard of reform and opening up, with an exterior rivaling any international city, is witnessing the desperate struggles of firms like Evergrande, Baonan, and Kaiser Group. Meanwhile, the financial sector, with companies like Ding Ean going down, echoes the crude harvest of P2P lending from a few years ago. This downfall is a microcosm of China's current state. Starting from the feverish property speculation, Shenzhen underwent a transformation not just in appearance but in the hearts and minds of its people. From the highest ranks to the lowest, insatiable desire spread, sweeping into every aspect of the city. The garnished neon lights at the night pale In comparison to the dazzling financial activities and capital maneuvers, everyone is eager to be the middleman profiting from price differentials. In the end, prosperity becomes elusive, and the once vibrant city becomes a testament to the transient nature of wealth and splendor. If Ding Ean's so-called asset management is a Ponzi scheme, then viewed from a higher perspective, isn't the entire real estate industry in China fundamentally a Ponzi scheme? Isn't social security a Ponzi scheme? Aren't local government debts a Ponzi scheme? Under the CCP's governance, China has seen a long-standing trend of deception, lower levels misleading higher ones, the stock market fooling individual investors, social security giving false hopes to the populace, new energy vehicles exploiting subsidies, vaccines and COVID tests providing misleading information to patients, real estate firms and duping home buyers, and governments misleading real estate companies. In a society where deceit is the foundation, its eventual downfall is predictable, resembling an aging person whose organs fail one after the other.